Why on earth are Xpeng, Nio, and Li Auto stocks getting absolutely destroyed over the past 2 days? Guys, it's not just the August delivery numbers that have shocked Wall Street. There's a lot more stuff under the table that we need to discuss immediately if you're an investor in either one of these Chinese EV stocks. As you can see, the past 1 year has been quite painful for these companies, even though in the short term for a month or two we have seen a lot of relaxation periods in the share price. But right now, as we see something like Xpeng Motors actually hit a new 52-week low, there's a lot of questions that people are asking about the US-China relationships to understand whether or not all this EV growth is actually going to translate into a beneficial share price. But as usual, guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So the first thing here we want to address is what happened in the August delivery numbers for all three of these companies. Well, as you can see, we essentially saw a decline month over month for Xpeng Motors and Li Auto, whereas we saw a slight increase for Nio's deliveries month over month. Now again, in my opinion, month over month delivery numbers mean absolutely nothing because the year is a very seasonal EV cycle. As you can see, Li Auto grew 51%, Xpeng Motors grew 33%, and Nio grew 81%. So overall, across the board, very, very healthy numbers. And if you price in the fact that China is cutting interest rates, meaning that over the next 6 months, we should start seeing lending and leverage go back into the Chinese market, fueling demand for EVs, then there's absolutely no surprise in why I would think these growth rates are going to either stay the same or continue into 2022 and 2023. But obviously it's not as simple as that, and there's a very big reason why all these stocks are performing so poorly despite their year-over-year growth. And that is all to do with the seasonality in the Chinese EV market and also the US-China relations with Nvidia. And this chart sums up all of that extremely well. As you can see in 2022 already here in red, we have seen record deliveries across the entire board when it comes to plug-in electric car sales in China. So in my opinion, it's no surprise that we're starting to see a slowdown in the summer, especially since April and May of this year, we saw massive lockdowns in China. And so now that people are coming out of the hole and getting more access to services and products in China, the first thing on most people's minds is not going to be to buy an electric car. And that is something we actually saw happen in 2019. As you can see, if you look at the blue bars, overall, we saw a very healthy first few quarters. Because of that massive demand being pulled at the start of the year, the rest of the year was relatively slow all the way up until October, November, and December. That is potentially a very similar trend to what we're going to be witnessing here in 2022. And on top of that, many folks fail to realize that it's incredibly important to zoom out and look at the bigger picture. As you can see right now, China is well ahead of its global EV adoption target of around 20% by 2025. Right now, they're sitting at around 24%, whereas obviously the US has a 50% target by 2030, which at least right now looks extremely difficult to achieve. And so the bottom line is, if you want to invest in the region that is seeing the most rapid adoption in EV sales, primarily driven by the government's NEV mandate, then China is a place to be. Because not only does the government in China give a lot of credits to consumers to purchase EV vehicles, but they also give a lot of credits to manufacturers to build new energy vehicles, which is obviously something we need to see in the US if we want to see Ford, GM, and all these established automakers actually switch over to EV powertrains. And that doesn't even include the fact that in China, there is a corporate average fuel consumption requirement that can be benefited from extra NEV credits from making more and more EVs, which is probably a big reason for why China is so ahead of its target of adopting electric vehicles in 2025. And for those wondering which stock I'm putting all my eggs in to take advantage of this growth, it is undoubtedly going to be Xpeng Motors, because right now this company has the widest product offering out of all the other NEV companies in China, and they also have some big investments in not only autonomous driving, but also wireless aircraft and electric drones. And overall, that innovation is something the Chinese government is most avidly going to support. And as you can see in their latest delivery report, Xpeng not only increased year-over-year deliveries for the first 8 months by 96%, but the particularly important part is that they delivered around 2,000 of their newly launched P5 smart sedan family. this is a pretty big important deal because this is a higher margin product than something like the P7, which is obviously more of a luxury vehicle. And the most surprising part is that the G9 SUV is not even included in those deliveries just yet, because this car only now has become available for pre-order in China. And we know that Chinese consumers love their SUVs, and that SUVs overall have a significantly better profit margin than sedans or even compact SUVs. And so overall, the growth trajectory for Xpeng's business over the next 12 to 24 months looks very much laid out. The only difference being that right now we saw a lot of the demand for Xpeng's products pulled forward in 2022, and we're obviously seeing the COVID lockdowns have an effect on the macroeconomic situation in China, which again is going to have a very minimal effect on the long-term prosperity of any one of these Chinese EV companies. And as you can see, this chart right here sums up this thesis extremely well. The green bars are significantly more sparse and hitting record highs in 2022 than they saw in 2021 at the same time of the year. And so it's no surprise we're starting to see a pullback in demand for EVs, but in 2023, this will most likely be restored as we see more of that blue and orange trend restore, where at the very beginning of the year, sales are very lenient, but then at the end of the year, we start seeing a big ramp in sales, which obviously is going to benefit not only the image around these companies, but also their top line revenue and their profitability, as obviously more scale results in more vertical integration and economies of scale. But you know what? The slight advantage for Xpeng doesn't even end there. Most recently, we had Nvidia being ordered by the US to restrict AI chip sales in China. And I think this is a big reason for why the stocks in China have been underperforming slightly, because this is raising concerns of that US and China relationship, which could be going down even more over the next couple of months as you see more back and forth about auditing and obviously the situation in Taiwan, which could be a pretty big detrimental factor for all stocks across the entire world if that situation really does evolve. But the reason why this Nvidia restriction from the US is important is because Xpeng Motors has a massive facility they just recently launched in China for AI development for autonomous driving. They actually have partnered with Alibaba on this, who is a 6% holder in Xpeng stock. And the reason this is such a big deal is because this facility is expected to provide Xpeng's processing time to go up by at least 170x as Alibaba Cloud becomes a major player in this investment. And obviously this is going to require some big chips, and if Xpeng and Alibaba partner on this and bring manufacturing in-house, that could be a big catalyst for both stocks, because then there would be some of the only suppliers left in China for high performance AI chips, especially since obviously Nvidia is not being restricted to do sales in China. And it's estimated that Nvidia is going to lose around $400 million of revenue per quarter because of this restriction. And so I hope that puts into perspective exactly how much AI chips are being offset from the US imports in China. But as usual, guys, let me know your thoughts down in the comment section below. Overall, I continue to be a buy the dipper on Xpeng stock unless something significant changes in the business.